Hello everybody, McGee Wolf with the Wolf Group. I wanted to give you a market update of all the interesting, exciting, and kind of crazy things that have been going on in the real estate industry, and more specifically about the mortgage industry in the last several weeks. COVID still is something we're dealing with on a daily basis, and we have curveballs coming at us left and right. But in the bigger picture, real estate in general is one of the major oars in our economy that is going to pull our economy back up to where it was prior to COVID and beyond. It's a very exciting time in real estate. Median home prices are higher. The year-over-year home valuations the homes are appreciating very, very nicely. Inventory remains low, which is a little bit of a problem, but I mean, there are bidding wars on homes. People's homes are only staying on the market for a few days, if that. Many are staying on longer, but overall, the market is very, very hot. Now, much of this is being driven by the low interest rate. They are, as all of you I hope know by now, that interest rates are lower than they have ever been. I locked a client the other day on a $500,000 refinance that he wanted to pay a little bit to buy the rate down, but he didn't have to pay a whole lot, and he got on a 20-year mortgage 2.375. It's just incredible what is happening with interest rates right now. But my main message today is, are these interest rates going to last? Well, of course, we all know they're not going to last forever, but with where they are right now, now is the time. If you are on the fence to trying to decide whether you need to stop renting or to buy, you need to talk to a reputable loan officer with experience that can show you your options. If we're all been busy dealing with all this craziness, if you own a home right now and you have not refinanced yet, now is the time. People are saving a couple of $100, $300, $400 a month on their house payment. And then those who are restructuring their debt are saving a whole lot more. I saved a lady over $2,000 recently, and she was actually in a position where I showed her how she could even pay her house off sooner than she was originally scheduled to pay it off after consolidating some debt. She had a couple of car payments and some credit card debt, and it really dramatically changed her finances for the better. But these rates are not going to last forever, as we all know. And in my opinion, not that I'm one who comes up with some of these ideas, really I read a lot and I'm in a position to learn from a lot of people who make their living predicting what the market's going to do. And I wouldn't be surprised if a couple of months from now, rates are back up above 3%, which is still an amazingly low interest rate. Those days are coming, and I think they may be sooner rather than later. Some of the reasons why is that COVID hospitalizations are trending downward, which is a great sign. Possibilities of therapeutics are more likely now than they were even 2 or 3 weeks ago. We've had some therapeutics roll out. They're only going to get better and better. And what is going to happen when we get a vaccine, if we get a vaccine? We may never get a vaccine, but we are going to deal with COVID. Make no mistake, forces at work are going to mitigate the impact on our economy and our society, because that's the way America works, is that we have problems and we solve problems. The solutions are coming. Also, the election is going to be over on November 3rd. Make no mistake, that is playing a role in all the economic dynamics of what's going on, for sure. But more businesses are getting traction. People are going back to work. Now, one other thing to keep in mind is as the economy improves, the Fed will slow in their purchases of mortgage-backed securities, and that is suppressing interest rates. So all of these things, I believe, are coming sooner rather than later. Now, something happened on Thursday. We had a surprise announcement by the Fed chairman. And of course, they speak in hieroglyphics or in terms that, I have trouble understanding, and I'm kind of in the economic environment. The Fed made some reference that the bond market did not like. There was a reaction to it, and it had to do with inflation. And inflation is the enemy of interest rates. So let's just take a look at the graph here, and I'll show you what I'm talking about. Okay, let's take a look at the graph. I've zoomed in here a little tighter on the graph for those of you who've watched these videos before. What I was just speaking of was right here on Thursday, the 27th. That's when the Fed made the reference to inflation and the bond market did not like that. On Friday, we recovered all of those losses, so it was a net wash, but inflation is not looked upon favorably by the bond market. Right here, you can see on the 12th and 13th, that was when the FHFA announced that they were going to tack on a 0.5% fee to all the refinances on conventional loans in America. It was an outrageous tax, and that's a word that I'm using. They call it an adverse market fee, but it's actually a tax in my opinion, and it's so misguided and misplaced. It's really, really awful. But then there was an announcement to counteract that they're putting that off, where they're originally going to enforce it on September the 1st. They're now going to enforce it on December 1st, which will be here before we know it. The market is still operating very comfortably. You're seeing right here this resistance band all along, where we got to this point on August the 4th. It's corrected down, and we're still staying right in between the support and resistance, and interest rates are remarkably good and should be in the short term. All right, so what is my main message to you right now? It is, now is the time. You're in a race because something is going to happen, and it will be abrupt more than likely, that will make interest rates move upward significantly. Someone said that had been a manager of secondary markets for a long, long time. He said, rates take the stairs down and they take the elevator up. So it's going to come, and it's going to come abruptly, and you don't want to be that person who was sitting on the fence, or I'm too busy, and you're going to turn around and you're still renting, or you're still paying a note on your mortgage that you really shouldn't be paying. You should refinance. So have a conversation with an experienced loan officer. Because you're in a race, time is your enemy. I have a client recently who had their loan with a company that was supposed to be quick. They had their file in processing for over 60 days. She was not able to get anybody on the phone, have a conversation, what's going on. She knew nothing about the file. There are companies that do a whole lot of business. They're marketing, they're advertising low interest rates, which is just a teaser to get you to call them. But in the reality, we're all dealing in the same interest rate pool for the most part. But the value of having a conversation with somebody that you can get on the phone, that you know and you trust, is very, very valuable. If you're looking to purchase, you need to map it out. What is it going to take for you to become approvable, or what I call bankable, in the price range that you're interested in? It's very important that you do that. The other thing is, for refinances, you need to get organized and get your things together, and give a good loan officer a call. Of course, we're here to help you. We would love to be the ones to help you on a purchase or a refinance, but now is definitely the time. And if you're a realtor, we're in a dynamic environment. It's a new normal, right? Who ever heard of Zoom conversations or Zoom meetings really 6 months ago? The market's changing. Who was affected the most when COVID hit? It was blue-collar workers and service industry individuals. Well, as those people go back to work, people are going to be looking for homes, hopefully. For the people that are white-collar, what have they come to realize? They've come to realize that they're able to work from their home in many cases. And people are leaving the cities where they have super high expensive house notes or rental payments. I heard something about somebody renting a top bunk of a bunk bed for $1,800 a month. How insane is that? They moved to Idaho and bought a house, but they were in an industry where they could work remotely. So white collar individuals are going to be looking for higher priced homes with more space, because they're going to want an office out of their home. That's exciting. You need to be flexible and be able to move with the market. Whatever your situation is, I encourage you to act now. And if there's anything we can do to help you, we would love to do that. Hopefully you found this video helpful. And if there's anything we can do to help you, we would love to. Have a great day.